welcome to today's fundamentals. Hello, Pedro.
Hello.
So what's up in the FX market?
Well, the euro has been moving in an upwards trajectory following ECB's Schnabel's comments yesterday. Now, ECB Schnabel reiterated that the bank should err on the side of more interest rate hikes. So in a sense, ECB Schnabel is suggesting that the bank would be more likely and should perhaps in his own view hike interest rates perhaps above the necessary level rather than risk staying at current levels and inflationary pressures persisting in the Eurozone. Hence, ECB Schnabel would prefer to continue hiking interest rates, which is why the euro may be moving in its upwards trajectory. The British pound is also moving in an upwards trajectory, given support perhaps from the slight weakening of the greenback. Now, the Aussie is moving in a downwards fashion. The reasoning behind the Aussie moving in a downwards fashion could be that there's worries from China that the stimulus packages and the interest rate cuts by the PBOC may not be sufficient enough to increase demand in the economy. Now, a reduction in demand from the Chinese economy would in turn result to a reduction in demand for the from exports from the Aussies. So Australia is heavily dependent on China for their exports. Hence, slowing demand in China could hinder their imports that they're bringing in from Australia, hence weakening the Aussie. The dollar against the Japanese yen is down in today's trading session. Now, this could be that another reason the greenback is weakening whilst the Japanese yen is gaining. Now, we're also anticipating the minutes due tomorrow's Asian sessions, which could provide some support for the yen. As such, it could be an anticipation that the minutes may support the yen, hence appreciation of the yen, whereas a depreciation of the US dollar. The dollar against the Turkish lira appears to have halted at the $23.65 mark. Now, this could be also an anticipation of the interest rate decision by the Turkish Central Bank, where many analysts are expecting that the bank needs to hike. Yet, in my own personal view, despite having to hike, we may see the hike coming in later during the year, as currently President Erdogan was re-elected without hiking interest rates. Hence, he may prefer to maintain the status quo, despite appointing Wall Street friendly, I'd say, such as Simsek and the Turkish Central Bank head into positions which could support the Turkish lira. It appears that that may not be the case as of yet. And the dollar against the CAD is slightly up during today's session, which could be a weakening of the Canadian dollar due to its heavy reliance on oil as its primary export. Hence, a slight reduction in the price of oil could influence the CAD, which has allowed the greenback to appreciate.
And how has gold's price been reacting?
Gold's price has been moving in a sideways fashion. Now, despite easing fears of a recession, I would say, it appears that a reduction in global demand from China, combined with numerous other factors, could be spiking some fear into the markets that we may have a recession, yet it's uncertain, which is why it's moving in a sideways fashion. So markets are seeing that perhaps inflationary pressures may be easing, hence banks may be deciding to reduce their interest rates, which may have facilitated gold's descent. Yet on the other hand, you have worries from China about demand and growth. So worrying signs from the world's largest economy. So one of the world's largest economies, which is maybe countering that effect. So it's moving in a sideways fashion as of now.
And how about US stock markets?
Well, the US stock markets were closed yesterday as it was a holiday in the United States of America. Yet, during today's pre-market and in Friday's session, it appears that all three major indices have been down, with the Nasdaq 100, the Dow Jones 30, and the S&P 500 all moving in a downwards fashion.
And how about oil prices?
Slightly up, but barely. They've been moving in a downward trajectory since yesterday, which could be the reason why the Canadian dollar, the loonie, has weakened. Hence, even though it's slightly up today, I personally not expect that to continue, as the markets are fearing that what China has done in terms of reducing interest rates and implementing plans in order to boost economic activity may not be enough.
And what about Airbus?
Well, Airbus surprisingly has been moving in an upwards fashion, following the announcement that they've sold 500 planes to one of India's airline carriers. It may have provided support for the stock, Reason is it appears that it's outpacing its competitor Boeing in terms of sales, and there are rumors, but it needs to be stressed there are rumors that may be linking Airbus to another sale of its A320 plane, which could further provide support for the stock. Yet, currently appears to have benefited from the sale of 500 planes, which are valued at roughly, if I'm not mistaken, 50 billion US dollars, which may provide for the support for the stock.
And what's in today's calendar?
In today's calendar, we note that the Eurozone's current account is due out today for April. ECB's Enria is also expected to speak. St. Louis Fed President Barkin is anticipated to speak as well. We have the US building permits, which may not significantly impact the market. However, from Sweden, Riksbank Governor Theden is anticipated to speak. ECB's McCall, yet I would highlight Fed Vice Chair Barr's speech, including ECB Vice President De Guindos. Now, we highlight Vice Chair Barr's speak because tomorrow, Fed Chair Powell is anticipated to attend his biannual meeting before the House of Representatives. Hence, we may see some correlation between the Vice Chairs and the Fed Chair's statements. And lastly, during tomorrow's Asian session, as we noted before, the release of the BOJ's monetary policy April minute meetings.
Great, thank you for your time. Join us after a short break for technical analysis.
Hello, everybody, and welcome to another technical analysis. So, starting off with the common currency against the greenback, we can see that the euro has been moving in an upwards trajectory, yet the past 2 days has been moving slightly downwards. Not surprisingly, in my own personal opinion, why it's broken above R1, small market correction lower, and as you can see, it's in the mid-range of the Bollinger Bands. So, market correction lower, currently testing resistance once again, yet it's make the slight break above. And as such, I would anticipate our bullish sentiment to continue. Why? Small correction. RSI figure near still above 50 and close to 70, implying a bullish market sentiment. Hence, we maintain a bullish outlook for the pair. Now, this could also be resistance now turns support, given that it's above. Could be edited to be brought slightly lower. So we could bring S1 at 1.0910. In 1.0128. Let's just actually fix this real quick. 1.0910. Yes. And then S2 at 1.0660. 1.08660, excuse me. And then we have S3. So resistance now turns support. S1, S2, and S3. We could even bring resistance at R1 at 1.0950. So this could be edited, brought lower. So as we can see, for our bullish outlook to continue, we would like to see a clear break above R1 at 1.0950, with the next potential target for the bulls being the 1.1005 level, so 1050, 1005, excuse me. S1, S2, S3. For a bullish outlook, once again, breaking above R1, moving towards R2, and then potentially towards R3. Whereas for a bearish outlook, which would have to break below S1, breaking below the downwards moving trend line at S2. Yeah, it should break below S1 and break slightly, make a clear break below S2. Then we switch to a bearish outlook. Now, as you can see, the pound against the US dollar is testing support at 1.277. It's still validating our upwards moving trend line. It's broken slightly below, but on the daily, slightly lower, perhaps market correction lower. Yet, since it's still above S1, we would still maintain a bullish outlook because, as you can see, it's once again in the mid range of the Bollinger Band. May have been a market correction lower before moving once again higher. Yet, should the bears take over the pair, it would need to break below S1, moving towards S2, with the next potential target being S3 at 1.26150. For a bullish outlook, breaking below above R1, which is at the 1.28450 level. So let's just place this in 1.28450 level. So this would be R1. S1 would be at the 1.2770 level. So R1 and S1, once again, bearish outlook, break below S1, move towards S2. For a bullish outlook, breaking above R1, move towards R2. The dollar against the Japanese yen, as you can see, it's bounced off resistance at 142.10, yet it's still validating our upwards moving trend line, which you can see it's coinciding with the mid range of the Bollinger Bands, and we're still maintaining a bullish outlook for the pair. So for our bullish outlook to continue, clear break above R1 at 142.10, with the next target being 143.85. Whereas for a bearish outlook, breaking below our upwards moving trend line and breaking below S1 at 140.75. The next target for the bears could be at 139.15. Aussie, as you can see, has broken below S1, so support now turned resistance. So it's failed to break above our previous R1 at 0.6880. It's broken below the downwards moving trend line, below the mid range of the Bollinger Bands, and has broken below support now turned resistance. Yet know that it's on the lower end of the Bollinger Band, so it could be market correction lower. I would not be surprised if it moves slightly higher to the mid range, still below the upwards moving trend line, and moves lower to break S1 at 0.67340, and then S2 at 0.6610. And then my S3 would be at 0.6502, well, 0.0650. Now, once again, the reasoning behind our support and resistance levels is support, validated again, moving backwards, as you can see, turning point, which then the pair moved lower, fluctuating around S1, so validating, S2, so validating S2, support. And if we go, we will mostly see our support and resistance levels being validated once again. So since it's broken below support and outturn resistance, we switch to a bearish outlook, and supporting our case is the RSI indicator, which is below 50. So the RSI indicator being below 50 implies a bearish market sentiment. Now in gold, as you can see, it's moved below our sideways moving channel, and is currently testing resistance at 1955. So this would be S1. So let's just place that in 1935. R1 would be at 1955, and then R2 1980. Now it's moving in a sideways fashion, as we said during the fundamentals. I'm skipping through majorly the forex pairs because I want to look at Boeing and Intel. Some nice news coming out yesterday, especially with Boeing sales of about 500 airplanes to one of India's airlines. And there's also talks that Boeing may not be done with deals yet, potentially selling to a Mexican airline, which could hit at Boeing's market. So Boeing and Airbus are currently trying to fight over the Mexican airline market in terms of orders, etc. So should Airbus also manage to strike a deal with a Mexican-based airline, then we may see Airbus stock price moving higher. Why? Because the stock is potentially more valuable at this point in time. 1,885. See? And then R3 could be placed at the 2003 level. This is R3. R1, R2, R3 is testing R1, yet the narrowing of the Bollinger Bands may imply a sideways moving channel. So it could even be moving in sideways fashion. It's broken below on two occasions from our upwards moving trend line. Might be moving in a sideways fashion, yet there's resistance at 1955 as of now. I should break above, then I would rotate R2 higher, R3 higher, and then would bring R1 directly to this level, which is the 1967 level. But Intel. So as you can see, it's broken above our previous resistance level at 34.60. It's finding support at our previous R2 at 36.15 that we have placed in a previous session together. So this is resistance now turn support. I could even remove the 3460 level. But since it can't be too far off, 34, I stand corrected. The 3460 level will remain, which was resistance now turn support. So we have excuse me, this is becomes S2, 3460, resistance turns support. S1 becomes S3, and then R2 becomes S1. So we're simply switching support and resistance. Predominantly, resistance now turns support levels as Intel continues in its upward trajectory. It's it's spent about 30 billion US dollars in developing a chip manufacturing plant in Germany, and about 10 to 20 billion, if I'm not mistaken, in Israel as well, as this was announced yesterday. So this may be one of the reasons as to why Intel is moving higher. In addition to their new quantum AI chip, which is quite interesting. It's rumored to be able to complete quantum tasks at a much faster level and pace, which may be supporting the stock moving higher. So I would not be surprised if Intel continues to move in an upwards fashion. Personally, I would for a bullish outlook, we need to break above the 37.60 level, with the next potential target for the bulls being the 39.10 level. And then R3. R3 is too close to R2. So I'd bring them slightly higher. $39.30. This would be my R2. So for our bullish outlook to continue, I would like to see a clear break above R1 at 37.60 with the move towards R2 at 39.30. And then R3 at 41.50. Excuse me, 41.55. So R1, R2, R3. S1, S2, S3. Could even bring S3 slightly lower at 32.60. So we're maintaining a bullish outlook for Intel as long as it remains above S1, with the next potential dark target being R1. Note that it's exceeded the RSI level of 70, implying a strong bullish market sentiment. And then we're going to be looking at the dollar against the Turkish lira. I put 23.65. Strong resistance at 23.65. So R1, R2, R3. It appears to have found a ceiling at 23.65. Now, many market analysts are expecting that the Turkish central bank will hike interest rates. Yet, given that President Erdogan was re-elected with his current economic policy, despite placing in Wall Street darling Simsek as finance minister and then switching the central bank for a former Wall Street banker as well, hinting that they may be returning to more orthodox economic policies. Personally, I think that the current status quo may be maintained as there is no immediate reason for Turkey to switch, perhaps hiking interest rates aggressively, a small hike perhaps, yet the extreme scenario, doubtful in my own opinion. I would not be surprised if it continues staying between S1 and R1 up until the interest rate decision. And then, should the bank hike rates to the extreme scenario, so more than 50 basis points, then yes, we may see S1 being broken with the next target being S2. Whereas, should they remain as is, breaking above R1, potentially breaking above R2 also, and then the next target being R3 at 25.50. So, we're also going to look at European equities. We're going to look at Airbus. So, you can have Airbus, and on the daily, so we're seeing that it moved, that it's moving upwards. It's like we higher. Bears pushed it down. Currently at yesterday's open. So immediately I can see the formation of an upwards moving trend line here, and the second one here. And then this too steep. So two upwards moving trend lines, and one could even see. Let's see if a sideways moving channel can be formed. Bit of a far stretch at this point in time to create an upwards moving channel. Yet, what it does appear to have here is resistance 131.90. I was currently testing resistance. So let's see for support. Previous high. Let's try getting the bodies of the candles. Get more substance. So this would be my S1, 129.40. That's one for me. So Airbus has announced the deals, as we said before. It's interesting to see as the Paris air show continues in its second day, if I'm not mistaken. Now, if Airbus manages to clinch the Mexican market as well, in terms of um, airplanes, so selling to one of the region's air carriers as well, we may see the stock continuing its upwards ascent. So we're now looking for our S2 level. 126, 127. And then for S3, 124.20. Now, the RSI indicator is near the reading of 70, implying a very strong bullish market sentiment. Hence, we maintain a bullish outlook for Airbus. Why are we drawing our support and resistance lines here? Well, as you can see, volume gap dropped, moved higher, filled the gap, moved lower. I'm looking for the bodies of the candles to validate my hypothesis for a support and resistance. I do personally not like wicks as much in terms of drawing my support and resistance channels from there. I am fine with using the wicks to validate support and resistance, but when drawing and placing my support and resistance levels, I'd rather use the bodies, so open and close, rather than the wick. I think that the bodies of the candles provide more information rather than just the wicks. So my support and my support levels for now, and then we're going to be looking for okay. So at this point, let's just fix our S3 real quick. 124.20. Going to measure a bullish candle and then reflect that higher. So 131.90. We're keeping about $2 to 3 between each support and resistance level. $135, well, perhaps at 133. $133.65. Now, since I don't have previous data, I'm probably going to go for a big figure at 134, and then at 137. So essentially, could even bring lower. We're going to be maintaining a bullish outlook for Airbus. Why? The news stemming for the company have been positive, hence moving in an upwards fashion. Should they continue and should more deals be announced for Airbus, so selling more airplanes, then we may see the stock continuing breaking above R2 and then R3. So for our bullish outlook to continue, it would need to break above R2 and then move towards R3 rather than just breaking above R1. Why? Because it's currently testing R1, hence might slightly break above and then move lower. That is still a possible scenario. So for a bullish outlook, breaking above R2 and move towards R3. Let's just place in our support and resistance levels. So once again, bullish on Intel and bullish on Airbus. Upwards moving trend line, bouncing off our one at 131.90, maybe correcting slightly lower, could move back to a swan before moving again higher. Yet, our indicator running along the figure of 70, implying a strong bullish market sentiment as well. perhaps moving slightly lower to the upper trend line, then moving higher. RSI figure of 70 implying strong bullish market sentiment. Therefore, maintain a bullish outlook for Airbus, including Intel as well. And that is it for today. Thank you, and until next time.
Session today, we want to continue with trading insights about silver and look at what affects the price of the precious metal. Silver prices are not easily influenced or affected by political or economic events. This is because it is viewed as having an inherent value, meaning that its value is protected against times of financial stress or political instability. When compared with gold, the price of silver tends to be much more volatile, while a much higher proportion is used in industry than the yellow metal. The price of silver is dependent on supply and demand. In terms of supply, silver has the largest volume compared with other precious metals. Meanwhile, the mining of silver has substantially increased over the past few years and is often a co-product of either mined minerals, such as gold and copper. Due to its wide use in industrial fabrication in products such as conductors, switches and fuses, silver prices can be affected by industrial output levels in terms of production volume. The price of silver tends to follow the price of gold. Although this is not set rule or formula, there is some evidence that a price correlation exists between the two precious metals. As the world's leading currency, the US dollar has an impact on the price of silver. The price direction of the dollar has an inverse effect on silver, meaning that the precious metal can be an appealing investment when the dollar is low. Thank you for watching. This third part completes our series on trading silver. Stay tuned for more exciting educational videos.
Okay, all right, guys, welcome to another IronFX exclusive webinar. So yeah, today we'll be on the TDI trading strategy. So yeah, I got to read the disclaimer first before I begin. So the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So the material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained. So redistribution of this material is strictly prohibited. So welcome Christina, welcome Peter, welcome Ruben, welcome Didiero, welcome Steven, welcome, Thomas. So where are you guys from? Where are you guys from, may I ask? Okay, you are from Germany. Wow, nice. That's a place I want to visit one day. So I haven't had the time to go to Europe yet. Oh, Netherlands. Wow, all of you guys are in the European side. So how's your trading week been? How's everyone trading week been? Any trades? Any trades taken? Namibia, where's that? So let me check it out on Google. Namibia. Oh, it's a country in Southern Africa. Nice, nice. All right. Anybody has taken any trades so far this week? Taken any sells, taken any buys? Or Christina, you have not taken any trades as you are still learning as a beginner. How long have you been trading? A few gold trades. Wow, nice. Did you buy or sell, Steven? Okay, let me load the layouts first. Oh, both. Okay, you're scalping both ways. Nice. You are against trend and with the trend. Oh, okay, still learning. What kind of trading strategies do you guys use? So by the way, if you actually have a strategy that is working well for you, please do not change your strategy just because you watch this webinar or watch another webinar teaching you a new type of trading style. Please continue using the strategy that works well for you. Oh, Christina, for 4 months you were taking trading signals but were no good. So learning now for myself. Well, it's very, very normal. So when I first started trading, it's very normal to take signals. I will not fault you guys for it. When I first started trading, I also used a lot of trading signals, even paid for premium signals on Telegram. So it's normal that traders like us start with signals, since most of the time we just want to make money. So last time I actually paid for signals, followed others trading gold, lost a lot of money. So it's part of the learning process. So once you have gotten the taking signals, trading with signals out of the way, the real learning can begin now. Okay. So let us begin. So just a quick recap. So this entire week I've taken, I think, 5 trades. So today I've taken a trade on USD CAD and USD JPY. So USD CAD, you guys can see on the 5-minute chart. So we have a high here that was just taken out, the previous high right there. So that was my original take profit target. So if you draw a line across, that was my take profit target. Take profit moving on towards the 1 minute. So price was around here earlier on. So when price went up around here, wait, let me draw things out. So I actually drew a line across. You actually see that price took out the previous low. So at this point in time, I'll write liquidity taken out. Liquidity taken due to relative equal lows. So I'm actually using smart money concepts, just showing you guys a quick recap before we can begin the topic that we are going through today. So relative equal lows, what I'm looking at, it's candles of, as mentioned, relative equal lows. So the candle was taken out, price got taken out, and then I saw that price went down, shot back up very, very strongly. So at this point, I actually thought I could take a buy already. So I entered using a Fibonacci line, drawing a fib from the bottom of here to the top. I was looking to enter on the retracement. So if you actually draw a line across, there is a nice little tiny overlap support area. Okay, let me just draw the line across. There's a nice overlap support. So this was the support line that I was looking at. Support line. I was trying to enter right there. So I took a long position there. Upon the retest, my stop loss was below the previous swing low. So all the way down, have a relatively safe stop loss. Most of the time, price would not actually hit my stop loss. So I was actually risking 13 pips for my trade. So I was actually aiming higher, aiming higher, somewhere up on the daily chart. The take profit was higher. But because I had to do some work in office, I actually closed out my trades early. So I closed out my trade early, netted only about 8.4 pips before I close everything out. So yeah, that's the only trade I've taken on USD CAD. So the next trade, although the risk to reward is negative, but hey, profit is profit, pips is pips. As long as we take profit, we cannot complain. So showing you guys another trade that I took just now earlier, USD JPY. So if you notice that price actually went down, you take a look at this entire swing. It swung all the way up. So obviously when you see such a big move up, you always expect a retracement back down. So what did I do? I actually draw a Fibonacci line from the bottom of this low towards the high right there. So if you draw a Fib bottom to the top, then you realize that I was looking that price actually tapped into the 78.6% Fibonacci ratio. So price continued going down. So I was always looking for some kind of strong momentum like this, strong momentum pushing back up. So a strong momentum reversing back up can indicate that price has reversed, possibly indicating a shift to bullish market structure. So what happened? Price tapped into 78.6. Let me clear things out to make it cleaner for you guys to see. So tap into 78.6, price went down, and then suddenly shot back up very, very strongly. So what did I do? The moment I saw price break, I tried to enter on the next tiny overlap support area. So we have a nice little overlap support. The overlap support was listed right here. So I took a long entry, long position, entered right at that overlap support, stop loss below that recent low, also risking 13 pips, and I aimed for price to head towards the upside. So this was my final take profit target, the previous swing high. So I noticed for USD JPY, normally when price actually consolidates, if you actually notice a pattern, let me get the take profit line is not there. So if you actually notice that price went up towards the take profit target, which is the previous swing high, immediately rejected back down. That is the reason why I close my trade always at the next high. So that's a trade I've taken. So it netted me about 24 pips. So next, let me show you guys the IronFX YouTube channel. So webinars like this should be streamed and uploaded to YouTube. So it's under IronFX. Feel free to subscribe to this YouTube channel. Hey, hi there, Daihiru Dande. I think you left. Okay, I think you left. Okay, you're still here. So, hey, good morning to you. Your name is Remain an Ordinary Dahiru Dandere from Sokoto State, Nigeria. All right. So yeah, welcome to this webinar. So if you want to find out more free webinars like this, you can head on towards the IronFX website. So IronFX website, it's at this link right here. So I'll send the link to the chat. You can check the website out. So you can go under IronFX School. Okay, let me retry. IronFX School. Okay, wait. IronFX School under webinars. So it should be listed as popular. Click on it. I'll send the link over to the chat once again. You scroll down. You can actually view our educators that will teach you guys trading strategies. They are Forex instructors. So we have, okay, my image is not here yet. Okay, I haven't introduced myself. So some of you guys have already seen me before. Let me find the webinar part. Okay, so you can see here, So on this page, you can actually notice that we have the TDI trading strategy right here. So the next one, it's live trading strategy on February 23rd, which is tomorrow. So today, I'll be going through the TDI trading strategy. So without further ado, let us begin. Okay. Wait, let me clear things out. Okay. So my name is Chen Yongjing, and I'm the trade analyst for Everest Fortune Group. So Everest Fortune Group is actually the finalist for the best Forex research for 2019, 2020, and 2021. So we are also the finalists for the best equity research for 2020 and 2021. So right now we actually have a special collaboration with IronFX where we are bringing you guys the good stuff, the juicy stuff, and the best trading education that you guys can have. So next, so the first part of this webinar will be held by me. The second part of this webinar will be held by Sarah. So that's her. Later, you guys will be seeing her for the next half. I'll go through half of it. She'll go through the next half of it. Okay. So agenda. It means a few topics to cover for today. What is the Traders Dynamic Index? How does it work? The TDI trading strategy. How can we improve on the strategy? So if you guys want, you guys can actually screenshot it down. So if I'm going too fast, I'm talking too fast, or I'm talking too slow, feel free to let me know in the chat so I can slow down or speed up. So yeah, by the way, any questions you guys have, just ask in the chat immediately. As soon as you can, type it out, ask away. Because if you wait until the end of the webinar, we might not have time to actually answer you guys' questions. So what is the Traders Dynamic Index? So it's actually quite a nifty indicator. So it's actually a combination of three popular indicators all at once. Relative Strength Index, the RSI. I'm sure most of you beginner traders has already used the RSI before. So, and also the moving average, MA, I'm sure you guys have already used it, touch it, on MetaTrader 4, MetaTrader 5, when you open it, it should have the MA or the RSI. We also have something called the Bollinger Bands together with it, so made up of three indicators. So the Traders Dynamic Index is a trend following indicator. Let me write it down. Trend following indicator. So it actually helps traders to identify entry and exit points in the market. So it's actually based on the current market conditions. So the TDI consists of two lines, the red line, which is I'll write it down, red line, which is the TDI's signal line. We also have the green line, which is the TDI's indicator line. So this is signal. This is indicator. After I write down, you guys, please screenshot this down before I continue. So the indicator line is calculated by subtracting the RSI value from the moving average of the price. So the signal line is a smoothed version of the indicator line. So one of the main advantages of the TDI is that it can be used on any time frame and any market, whether it be stocks, forex, or commodities. The TDI is highly customizable, allowing you to adjust the sensitivity of the indicator based on your personal preference and trading styles. So the TDI can also be used to identify trends as well as overbought, oversold conditions, RSI. So when the green line crosses above the red line, let me show you. Green line crosses above the red line. Maybe there's a slide for it later on. So when the green line crosses above the red line, let me get this out. Okay, it is a bullish signal. So indicating a potential long position. So when the green line actually crosses below the red line, it is a bearish signal, indicating a potential short position. So TDI can also be used to identify divergence. So divergence, we have bullish divergence, we have bearish divergence. So later we will have some examples of the charts. We will show you guys how to make use of the TDI indicator. So the TDI also uses Bollinger Bands in its calculation by taking the difference between the upper and lower bands and plotting it on the TDI indicator line. So the calculation provides a measure of the volatility in the market, and the TDI uses this information to help identify potential entry and exit points. So let me just move on. Okay, please screenshot this down before we continue. Give me a moment. All right, so we are back. So RSI, it shows the strength, volatility of the market. It indicates if the current price is overbought or oversold. So you got to know green line is the fast, red line is the signal line. Please screenshot this down also. Before we continue, I'll just be going through this slide fast. We'll be going through the examples very, very soon. All right, once you guys have screenshotted it down, let's move on. So the Bollinger Bands is actually used to estimate the oscillation of the trading channel. So it looks like a rubber band. It looks like a very, very big range, a big channel that is forever moving with price. So key zones to define market reversals, 68. Anything above 68, overbought. Anything below 32 is oversold. Please screenshot this down. It's very, very important. It's a key concept to make use of the TDI indicator. All right, once you guys have screenshotted it down, let us move on. So this is how the TDI indicator looks like. You guys can actually go on to TradingView, you search TDI indicator. So when you click on it, add it to your chart, it should show as TDI GM. So looking at the TDI indicator, we still don't know how to use it. So this is a Bollinger Band. This entire huge channel, this red channel, this green channel that is moving along, that's the Bollinger Band. So as mentioned, the green line is the fast line, the red line is the signal line. So green line is to smoothen things out. Red line is the signal line. So you can see here an example. So how does it work? How does it work? So for short term, this is for short term. I'll just highlight it out. So a buy signal. So when the green line, just take it as the green line, crosses the signal red line from below. Note this down. There's a very, very big difference. So a sell signal is when the fast green line crosses the signal red line from above. So just take note, this is a short-term trading signal. So crosses occurs very often. So stronger signals if it crosses in the overbought, oversold zone. Where's the overbought zone? At 68. Oversold zone at 32 region. Please screenshot this down before we continue because we are moving on to the live examples next. So just remember 68 overbought, 32 oversold. Or if you guys find it difficult to remember, take it as overbought as 70, oversold as 30. So you just round it up to the nearest whole number. Okay, next. Taking a look at the TDI trading strategy. How does it work? You notice that at this specific crossover right there, indicated by the blue circle, you notice that the red line has crossed the green line from below. So if you actually look up, once it crossed over, price became a buy signal. So price continued moving bullish for the short term. Okay, Peter, you are using MetaTrader 4. How can you put TDI on your screen? So you can actually download the TDI indicator MT4. So it should have been on the marketplace. Okay, let me find it. Give me a moment. MT4. Okay, maybe you can download it from this website. There are many websites you can find it online. Many TDI indicators, you actually search YouTube. There's a how to add TDI indicator to MT4 or MT5. So feel free to check it out. So maybe this link, is it free? Yup, you can check that link out. Okay, so somebody actually asked a good question. Doesn't it lag behind? So definitely it does lag behind. Every indicator lags behind. If you notice, if you draw a line all the way up, the sell has already happened 1 or 2 candles behind. So in this specific situation, the red line has crossed over the green line from above, indicating a sell signal. So it's more or less lagging indicator. It feels like a MACD indicator. MACD is also lagging behind. So notice right here, sometimes it doesn't lag behind. Notice right here, the red candle has crossed over once again above the green candle. So connecting it up here, price has started to move bullish in the short term. So next, looking at the top, you notice that price has went into the 70, above 70. Notice right here, above 70. What does it mean? Above 70 means it's overbought. So with the price above the overbought area, let me get my pen out. Overbought area, we have the red line crossing below the green line from above. So if you actually draw a line up all the way up, you notice that the crossover happened. You guys can actually take a sell for the short term. Sell until, where do we close out the trade? Sell until price starts to cross over once again. So when price crosses the red line once again, you guys can close out the trade, use it as enter and exit points. Okay, any questions so far? If you guys do not understand anything, feel free to let me know. So I'll clear the chat, erase all ink. You can actually screenshot this down. It's very, very clean now. Okay, maybe I draw a circle where the crossover happened. You guys feel free to screenshot it down. So what's the best time frame to use it? Well, you can actually use it on the 1 minute, 5 minutes, 15 minutes time frame. So personally, if you want a stronger crossover, likely you can use a larger time frame like the 1 hour time frame, because most of the time the smaller time frames such as the 5 minutes, 1 minute chart does not hold much strength. So yeah, once you guys have screenshotted it down, let me continue. So next we have the crossing of the red and orange lines. So after I explain this, screenshot it down. It's very, very important. So this is for longer term trading signal. So for buy signal, the red line crosses the orange line from below. So longer term buy. So this is a sell signal. The red line crosses the orange line from above. So there's a very, very big difference. Instead of playing around with the red line and the green line, right now we're actually using the red line and the orange line. Okay, please screenshot this down before we continue. Next, I'll be showing you examples of how the longer term trading signal actually works. Right, next. Take a look now. The red line, I'm talking about the first blue circle right there. The red line crosses above the orange line from below. So right there, longer term trading signal price actually start to move higher and higher. So what happens next? We are looking for a short, a sell signal right here. The red line crosses below the orange line from above. So it's right here, and price started to move bearish. Another example right there. The red line crosses above the orange line from below. So it's also right here, indicating that the market has turned bullish. So another one, the red line has crossed below the orange line. So it's around right here. We actually have a short. So this time frame is likely on the 15 minutes time frame, 1 hour time frame. You guys can check it out. So feel free to screenshot it down. Let me take my eraser. I'll clear this out first so it will be cleaner. Feel free to screenshot it down, this down, before we move on. Next review. All right. Once you guys have screenshot it down, I would like to welcome my next analyst, my colleague. So her name is Sarah. I think I've shown you guys her at the start of the webinar. So this is her. She'll be coming to take over now. Okay, let me move on to this slide. Okay. She'll be taking over now. Please welcome her. Any questions you guys do not know, please feel free to ask her.
Hi everyone, my name is Sarah. So now I will taking over by my colleague Yunjin's part. Okay, so let's do the next half webinar by me. So now let's take a look at the orange line across 32, 15, and 16.8 levels. So actually, this is quite a rare long-term trading signal because when the orange line across the level from below is giving us the signal that to buy, or when the orange line across the level from above is giving us the signal to sell it. Okay, maybe you guys can take a screenshot on this. So this one just is the orange line is whether above or below or crossing it and to buy or to sell. But actually this is quite rare, and this one is in more longer term trading signal. It's not for like a short term trader. Okay, so next one. Okay, so now let's take a look at an example first. So you can see when the orange line across the level from below, you can see the orange line across the level from below. No, this you can see the point that we circle in blue is the orange line across it from above. is sell. Okay, so this sell means you enter in sell here and you are looking for take profit in longer term. Okay, so means you are looking, maybe you sell here. Sorry, let me use my pen. Okay, so maybe you sell here and you are looking for take profit in the future. Okay, so this one is more for long-term investor. So let's make it clear first. This signal is for long-term investor because you see the price actually, if you sell here, is up a little bit. Okay, then bounce it, then up a little bit. Then finally it is going down. So if you are a long-term trader and you are intend to hold your trade for like maybe more than one month or like a few months, this is the signal that for you to enter it. Same as here, you can see the orange line is crossing the level. You see, this is the level. It's crossing the level here. So it giving us the word from above. So giving us the signal to sell it. So we can sell it here, and while our take profit is all the way to here. Okay, so which is another long-term sell. Because you see, actually, if you sell it here, the price actually bounces towards the resistance first, then down to the support. So same as these things, you can see the orange line is crossing the 13 level, which is this level from above. It's giving us the signal to sell it. So actually this one, you can see the price is up first. So in long term, the price will drop it, but just not as recently. So far, clear? So now let's take a look at next examples. What is all the index trading strategy? So how are we going to apply all the indicator, all the index to add on our trading strategy and to make our trading strategy more profitable? Okay, so TDI uses several classical indicators at once. So just now my colleague has mentioned, Yongjin has mentioned it, is about RSI, MI, and Bollinger Bands. So the best to use TDI is to use it within trend and support and resistance, and also stop loss. So this all the trend support and resistance is giving you a more clear of targets. When is your stop loss? Where is your stop loss? And where is your take profit? Okay, so now let's look at this example first. So just now, my Yongjin has mentioned it, like which line cross which line, then giving us the signal to buy, giving us the signal to sell it. So let's look at one by one. Before you're looking at the signal first, okay, we may always draw it up all the support and resistance. As you can see, this one first support, which one is the overlap support at price of 1.08856. And the second support is at recent swing low is at 1.0311. The first resistance here is at 1.14849. So now I'm thinking about when is the correct timing that I'm entering the trade and how I'm going to, where is my position? Is there a long position or is there a short position? So let's take a look at maybe here. As you can see, maybe let's look at this point. You can see the right line is crossing the orange line from below. So it's at this place, it's giving us the signal to buy it. Okay, so imagine like we buy it here, then we may put our take profit towards the first support. Okay, or like we may put it higher to the first resistance. So as you can see, it's a very nice trade if you are entering using this signal. And maybe we take another example at here. So you can see the green line is across the right from below, which giving us the signal to buy or to short. The green line across the red from below. Okay, so actually this one giving us the signal to buy it. But you can say, because the price now is at what? It's out our resistance here. So maybe we may think about it. Maybe for me, if I enter in the trade using this indicator, I may not enter in because I need to think about it. It's not at the first resistance. I feel it's a bit dangerous. So you see, when we are using the indicator combining with the resistance and support, it's more easier for us to make profit because this indicator is useful, but you cannot use it solely on the signal when you enter in the trade. Okay, so maybe we take a look at this one. So you can see this one is the orange line crossing. Sorry, there is no level. So maybe we can see the green line is across the red from below. Green line is across the red from below. So it gives me us the signal to buy it. And it's just near the first support. Okay, so maybe we think, oh, it's a very good place to buy it. So maybe my take profit may be somewhere at first resistance. And my stop loss may put at the recent swing low. Okay, so this is a very nice trick that if you're following the signal and also you're following the support and resistance. So there are a lot of cross and different people seeing the graph in different ways. I cannot like show you guys all the cross. So maybe I will try to demo more on different thing, or maybe we can see this one. When you see the red orange line is crossing the level, you see the orange line is crossing this level, is crossing 15 level. So actually for the indicator, it give me us the signal to the orange line crossing the 15 level, crossing the 15 level from below. So it's giving us the signal to buy. So which means we can enter in the trade here, okay? So maybe our take profit will put towards the first resistance, and our stop loss will just put it at first support. Okay, so let's go to next example. Okay, here is another example. Same thing. Let's find out the first resistance, first support, or like second resistance, second support. Because this one, I want to give you guys a more clear explanation. So that's why I just using one resistance and support. So you can see here. The orange line, sorry, it's not orange line, it's the red line crossing the orange line from below. Okay, you can see here. It's giving us the signal to buy it. So we can buy from here and take profit towards the first resistance. Or we may also see this one as a green line across the red from below. Okay, green line across the red from below. It's also giving us the signal to buy. Okay, so you can see actually all indicators sometimes just add more confluence to our buyers, whether we should long it or short it. So let's take a look at this one. So the red line So the green line across the red line from below. So actually this one giving us the signal to what? To buy it. But let's take a look at the graph chart here. So actually here at the price is somewhere this level. So for me, I feel a little bit insecure because it's in between the first resistance and first support. I need a further signal to give me. Then means I cannot only rely on this signal. So I will not enter in the trade here. As I will say, okay, if I really enter in the trade for buy, then I lose it. I lose the trade. Or maybe we take an example as maybe we take the example as this one. So orange across the level below, orange line across the 30, this one I think is 39 level. So it's giving us a signal to what? To buy it, right? So maybe we can buy from here and our take profit is towards the first resistance, but actually it did not hit the first resistance. So these are all the signals that give me and whether I should enter in the trade, how I'm entering the trade. Should I long it? Should I short it? Okay, so now let's talking about how to improving on the strategy. Means how are we going to combining with all the indicators to improving our strategy? So firstly, we can use the index with Fibonacci retracement. So we can use all these index together with Fibonacci retracement or first support and second support. First support and first resistance to see is that the correct level or is that the best level for us to enter in the trade. So imagine take this as an example. We can see here the green line. No, sorry, it's here. The green line is crossing the red line from the green line is crossing the red line from below. So imagine we take a look at this one. The green line is crossing the red line from below, which gives us the signal to what? To buy. Okay, so now I take a look at this graph here. So now I take a look at graph here because the price is on the first resistance. So it should not, okay? So I feel I should not enter in the trade. I may wait for further signal to enter in it. Now let's take a look at another examples. Okay, so it's how are we doing it with divergence? So there are different kind of divergence. So here you can see it's very regular bullish divergence. So means bullish divergence means in this shape. So when you use a trading system that anticipating a market move, chances that you may not be wrong or right, but you cannot be right at all the time. As you know, the market is irrational. Therefore, there are times when you right on the money, but there are many times that you need to prove, there are also times it's wrong. Okay, so this is a very regular bullish divergence. And if you're following this, okay, so if you're following this trend, okay, actually this price maybe go up because it's on a bullish divergence. And same for here. This one is a bearish divergence. So a regular bearish divergence is the line we draw it on top of the candlestick, and the line we draw it on top of the red line. Okay, we only draw the divergence by the red line, means we follow this shape. Why we only draw this one? Because the other three lines is very smooth. So now let's take a look at TDI with Ichimoku cloud. So Ichimoku cloud is another indicator for us to identify is that a bullish or bearish market. So let's just do a quick recap. When the price moving below the cloud, something like this, you see this is a price movement and this is a cloud. So means what? This is a bearish market. So when the price, imagine, is moving here, so it's a bullish market. Okay, so because we are using all the cross together with Ichimoku, that's why it can give us a better signal for us whether it's a bullish or bearish. Should we enter in the trade? Okay, so let's just take a quick examples. So maybe let's take a look at this one. The green line. Okay, so even though the price now is below Ichimoku, okay, and you can see some is within Ichimoku. But if I really want to anticipate the market, or I really want to enter in the trade, you can see here, the green line is crossing the red line from below, so giving us the indicator to buy. Okay, so you can see here, even though the price is below Ichimoku, but I still can take a little profit towards a price of 1660. Okay, we may also look at here. The green line. Okay, so now let's look at here. So the green line is crossing the red line from below. So actually this one giving us the signal to buy it, right? But now I feel, okay, so it's at here, okay, the price is within Ichimoku. So I don't like to trade when the price within Ichimoku. So I may just wait it, but I may just hold it until further signal for me. So that is how we are using Ichimoku, okay, to help us to enter in the trade. It's like sometimes it's very good for us to enter in the trade. It's at more confluence. Sometimes it's no, I mean the Ichimoku cloud maybe show you to short it, but the signal for you is to buy it. So maybe you should hold it until further signal. Okay, so now I may end today's webinar, and thank you for your attending. Thank you, everyone.